Hello guys, welcome to the Train Parrot. Yesterday we closed the daily with a pretty ugly candle. At the same time, we haven't fully filled yet the CME gap and we have the CPI report incoming. In today's video, we're going to look into all of those aspects. I'll give you my take into whether we have broken support on the daily, 4 hour, what am I expecting and what am I doing most importantly with my position. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Let me remind you that if you deposit in 2bit using the link in the description, opening an account, you get automatically $50 deposits that you can use to trade for free. Now, if you deposit in this non-KYC exchange, you can get up to 30,000 in rewards. At the top of the description, there's also a link to join my trading competition. There's still around 2 weeks left to take part of this $3 million that we can win if we do really great in terms of trading. Speaking of which, at the moment, I'm currently sitting in profits. We are back again in the game. I'll cover the status of my trade just in a few minutes. And look at this, Grok has been suspended on X for violating the site rules. This has nothing to do with Bitcoin, but we are living in very interesting times where the AI that belongs to the platform gets suspended by the own platform. Really interesting. Martin is pointing out that Ethereum open interest hits $30 billion for the first time ever, and that is really impressive. You can see how it's reaching this level in here, and if you put an imaginary line in here, it connects all the dots at the tops. Pretty impressive. If you've been watching my videos, you know what I'm doing with my Ethereum position. You also know how much I have left of Ethereum. If you don't know, leave a comment down below and someone in the community will answer that for you, or you can watch the videos. Maybe that's a great idea too. Ethereum ETF had a wild day, biggest inflows in a long time. Everybody's pointing out at this 10 billion in open interest, although CryptoQuant points out at a short squeeze. Why is that? Well, if the open interest is very big and the price has been going up, there is that potential that what people are trying to do is to short Ethereum. And yes, bear with me guys, this is a Bitcoin video, but Ethereum is driving a lot of what's going on in the market, including with Bitcoin. Yeah, Ethereum has that power, being 1/4 of the market cap of Bitcoin, to provide confidence to traders that they are in a safer environment. When Ethereum is pumping, there's two things. People think that Bitcoin is going to hold, that there is enough healthiness to hold their Bitcoin. People sometimes take profit from Ethereum and they park it back into Bitcoin, and many others start flipping into altcoins. Just if you are new here, so you are well aware of things that people do a lot and why we're looking at Ethereum. So we already liquidated these shorts in here, and I'm pretty sure that there is liquidity to liquidate up until 4.7k. It's just that the platform is not properly showing it. If we focus on the short term on Ethereum at the moment, and people from CryptoQuant are saying, oh, the open interest is very high, are we gonna get a short squeeze? Well, that increase in open interest, what we have to do is look at the liquidations and see where is it being placed. If we put all the different sizes of leverage on Ethereum, we can see that we have a new bad boy here from yesterday that has been forming at around 4.150 up until 4.134, a lot more than what the shorts have been increasing. There's been an increase in shorts that can get liquidated at 4.4. Now let's see with higher leverage who is more exposed, and we get a confluence. It's always pointing towards the 4.150. So take that away with you. If you know what to do with that, good for you. I am not giving you financial advice. I have said in my previous videos what I'm consistently doing at these levels with Ethereum and how I'm planning to do the next things as we go into the top. Moving on into looking at what people are saying about the general markets, that if you haven't noticed, the general markets are the final boss. Stock market crash indicators warning of massive crash in stocks. This is Robert, which many people know. This post has almost 1 million views. Therefore, I don't respect what he's saying, but I do respect the size of the audience that is reading this crap. Good news for gold, silver, and Bitcoin owners. Bad news for baby boomers with 401k. Take care. So this guy wrote a book, and I don't really resonate with what he's saying. That's one way of putting it, but definitely the first thing I'm gonna point out is this. I don't agree with this. I do not agree that if there is a massive crash in the market that Bitcoin owners are gonna be safe. No. If you want to prove a short-term proof, every time that there has been a fear, there's been outflows from spot ETFs. So again, people saying that BlackRock bought and that there's no way they're gonna sell Well, there's two mistakes with that. It's not BlackRock. BlackRock is not buying a crap, okay? Every time you read BlackRock bought again, yes, this is the best bullshit that any influencer has ever put. BlackRock doesn't buy a crap, okay? Think about BlackRock like Binance. It's just an exchange. People and institutions are buying through BlackRock. It's just a product. It's just a fucking ETF. People can get scared and they can go to their BlackRock account and say, sell this into the market. And BlackRock is going to say, fine, fair enough, give me my fees. That's it. I don't care about your Bitcoin. Net taker volume hits a 3-5-year low. In the past 30 days, taker sellers have outpaced taker buyers by 350 million per day. Why do we care about taker? First of all, what the hell is a taker? A taker is someone that just sells using market prices, not putting a limit order and sitting and waiting, paying less fees. They just go for higher fees and they just sell. They're typically associated with emotion, either panic buying or panic selling, or just give me any price, I don't give a crap because I'm FOMOing. Okay, so it's typically associated with emotions, and in this case you can see that the taker is in the negative. That means that there are further emotion people selling at panic rather than buying. And when there is buying, we are in the middle of a pump. When there is panic sellers, there is a distribution going on and there is some correction. And yesterday we put a pretty ugly candle, and probably that contribute to make the highest level in all the cycle in the 30-day rolling of panic sellers. You can see in the previous cycle, and allow me to show you these hills how they increase, and the larger they increase into the red, the more likely that you're about to enter into a bear market. Okay, this cannot be used by itself to forecast entering a bear market, but think of it as every time this hill is longer to the downside, the riskier the environment is. So if you're not looking for exits and you're looking for your best entries within a red area where it's dominated by net taker sellers, you should go to the toilet and slap the rest of the morning yourself until your cheeks are bleeding, because otherwise you deserve those redbacks. Ethereum profit realization 7-day SMA peaked at 771 million a day in July, above December 24 levels, and is now ramping up again to 553 million. Profits from long-term holders match December 24 levels, but short-term investors are realizing far more gains, driving the current wave. So let's focus on what's going on in here in profit taking and the age of the profit take going on. And we can see that we are building now a new peak in here of profit taking. That's on Ethereum again. Warren Buffett is sitting on a record 347 billion in cash. Well, in here is a double story, right? Because he's stepping down, and some people say it's because of that. Some other people say is, because people are taking the money out of Berkshire Hathaway's because he's going. They like the dude, right? But other people are also saying it's because every time he has done this, it's because he's seeing that there is something coming into and it's gonna hit the markets. He has been interviewed. I remember listening to one of those interviews, and he was saying, no, it was just typical profit taking. Yeah, sure, of 350 billion profit taking that hasn't been rotated into new assets. So no investor is gonna tell you the full plan. So don't watch those interviews expecting him to tell you his master plan. Don't be silly. But it's a big word of warning, not just because it is him, but because many billionaires and hedge funds are doing that. It's kind of a, let's follow the money and let's see if there's a rabbit hole where we can stick our nose and see what's going on really under the hood. If we don't find anything, that's alright, but at least let's have a look. Hilarious bear trap if this BTC CME gap doesn't fill. There's plenty of people talking now about this candle that looks pretty ugly in my opinion. Some people are seeing it as a retest for continuation where we don't fill the CME gap. That is absolutely possible. Axel is seeing it in a different way. He says above all-time high there are lots of bears starting to short the market. This is visible in the daily candles at the all-time high level. That market wouldn't mind another correction down to 112 or 110. That is his own view. Then we have CRG saying this is an ugly ass candle on BTC. Can the dev do something? And I agree, it is ugly, but there is one thing in this chart that I still see as a potential for continuation to the upside. And I'm not talking about the liquidity that we have above our heads, that the level 2 that is so attractive for market maker. That is the case still, but I'm talking about the shape of the candles. If you're careful to look in here, you're gonna see that this, ignoring this candle in here, looks like a liquidity hunt. And typically a liquidity hunt goes beyond the resistance. So this definitely went beyond 120. It went indeed to 122, but it didn't take out the all-time high. My preference for liquidity hands is to sweep the highs where we have never been. In other words, either we never had this one. So if this wasn't in the chart and we were doing this, I will say, okay, that looks like a really ugly liquidity hand that sweep all the levels on the top that we've never been. Or two, this, if it went higher than the all-time high and then it retraced like just a wick to the upside, then it will be uglier than it currently is. Is it bearish as it is? Yes, definitely it is. I'm just saying that it could be more bearish if it managed to either be higher than the previous all-time high and end up in this state, or if this wasn't there. Anup is talking also about the same topic. Have a look at Anup's account. If you wonder why I look at the CPR model, is because years ago I started watching his channel and tolerating his accent. That is not my preference. There's nothing wrong with liking or not liking specific accents. I really like his channel and his content, and I think it's worth sticking around. BTC price is edging closer to closing the CME gap after yesterday's rejection, with the CPI report dropping at 8:30 AM ET. We could see a weak move that flash fills the gap. So there are multiple theories and multiple ways of seeing this. We got some people saying we can go into 110, that they wouldn't be surprised. Anup is saying, well, we could just as well just sweep the CME and then use that as a retest. I think if that is the case, it needs to happen very quickly. It needs to be just a sharp stick pinching that, closing it, potentially even leaving that small gap behind, a leftover, and then it needs to come back up into 123 and start, rallying very fast. Can we do that in the CPI report? Potentially. I will be prepared for that scenario, but it's not the only one, to be honest. And this is how people are perceiving the CPI report. To be honest, that's the way I perceive any economical data these days. Anything that comes from politics is pretty much this is what's going on. Let's have a look at the news. CoinShares weekly flows. BTC saw 260 million net inflows. That's bullish. That's all we got bullish today. 6 out of 10 moderately bullish is Strategy that purchased 155 Bitcoin. That's a very small buy of 18 million. And then we got number 3, which is to do with the candle, right? BTC stalls below 122, potential double top risk. We talked about that potential already before it happened. Not to forecast it, I'm not claiming victory over seeing the future because I have no clue what happens in the future, but I am a very well prepared trader that always sees all the scenarios on the table and doesn't get much surprises because, I prepare for multiple scenarios at the same time. If as a trader you are mentally wired to prepare for your most loved scenario, you are in the wrong direction. Directional traders, people that think it must be black or white all the time, are the people that I take profits from, right? You are financing me by being that type of trader. So go and write down your comments down below and let me know how you want me to spend your money in my holidays. Or join a better approach and start learning how not to be obsessed with the direction of the price and become obsessed with the actual profits. All right, so we have the CPI data coming in at 1:30 BST. There's a consensus headline of 0.2% or 2.8, 2.9 year on year, or the core 0.3, 3.1 year on year. The rate cut setup markets lean to a September cut already. Okay, so they have already this bias. A hotter CPI trims odds, a cooler print boosts them. So watch out with the inflation increasing because that pushes away rate cuts if you are part of the team that wants the rate cuts. Of course, so many people want to trade that. CPI scenarios sorted by likelihood. So we got number 1 in line with consensus. Most likely, that's a 50 chances that we are just in line. A mild increase, nothing too worrying. In that case, BTC and alts are gonna just be in the neutral. There's gonna be some move during the day, most likely, but the trend could resume. The timing, 0.60 minute chop, clearer read at US cash open. That is when the market tells you how they are absorbing the news, in which case there is little change to the September odds. Number 2, slightly hot. That is a bit more bearish. Of course, we had second most likely. This is from 25 to 30%, so just 1/3 of chances to get in a slightly hot with a core of 0.4% or more. In this case, this is risk off. Okay, so this is a 2 out of 10. BTC dips and alts underperform. There could be a quick sell within 15 minutes, followed through risk risk into 24 and 48 hours. Rate cuts, September odds slip. Higher for longer talk is going to become kind of the trend. Third scenario is a cool, less likely. Getting a 15 to 20%, let's say the core is less than 0.2 and the year less than 2.9, in which case is really bullish because this supports the idea of the rate cuts. There are no further reasons to keep the rate cuts, and Trump is going to shout very loud, hey, let's get the cuts. We are going in the right direction. Now, another thing is whether that CPI is really authentic, if it's really calculated in the right way. Let's remember that labor data was all corrected after a while. They can do the same with anything, so watch out with that as well. Timing. Pop in first hour, potential continuation through US session, rate cuts, September odds rise. Market may start debating extra 2025 cuts. That is bullish, definitely. Very cool, soft growth vibe, least likely. This is just a 5 to 10%. This will be extremely bullish according to what ChatGPT is capturing from the public sentiment. Okay, scanning tons of articles and is coming with this. This is not something I wrote with my own ideas, although I agree with some of this, at least in the short term. And my Patreon community is asking me a few questions this morning. Considering RSI almost touched 80, can we expect a reset or almost BTC price going down for a few days? Eric is saying that could the CPI be the reason for market makers to grab the liquidity down to 106 and 107? And how likely is that? Well, if we get an increase in CPI in the inflation, we were reading that that could spook the markets. If we get confirmation later from general markets open that they are really wanting to sell off due to that, and Trump doesn't step in saying, hey, hold on the horses, that is still not high enough to cancel the rate cuts, well, things could get really shaky. Impossible to tell, but that 107, 106 is really an important level. And let's remember that we have more fun for the rest of the week. We have on Thursday the PPI, although I'm not going to put out a video on Thursday. Retail sales, it's also coming in on Friday. This is how it's looking currently, the CME gap. You can see if we focus on this area in here that multiple times we have tried to enter the gap. We have taken partially the gap, but we are putting now higher lows. Potentially, if we don't break that trend, we could end up holding there. Is a possibility. I never count on anything. I am trading to benefit from closing the gap. I don't know if I'm gonna manage to do that. Remember that there is a second gap located at 115 as well, although it's very thin and it's low likely that the market is gonna be looking at that one. Most of the people are currently focused on closing, and at 117.5, that is where it ends on CME. But people are so ignorant that they think they place their orders at 117.5, which is more or less here in the middle of the CME gap, which I interpret as ignorant because maybe they think that is the price where the gap ends, but maybe I'm being naive and they're just placing the take profit in the middle of the gap because we want to secure taking profits inside the gap and not at the end. They don't want to be the last one to take profits because that could spoil the alpha. I'll show you the order book. We'll see if it's still like that in just a minute. That is alpha, right? Knowing where there is that buying wall within the CME gap is probably something you want to hear about. And yesterday we put a 4-hour breakdown. We are also on the daily still healthy with this breakout to the upside, although we have the ugly bearish candle close. Let's have a look at the charts on the 4-hour. Yes, we put multiple candles pointing down. We ended up reaching 77 on the 4-hour. We haven't yet gone into 85. Thanks to this, the target of 85 has climbed now into 135k. From yesterday, we were pretty much at 130, so 5k additional because of this closing down. Now, to get to 85, now we need to do something big, guys. We need to reclaim, okay? And this can happen, let's say if it happens in just a single candle, then we are going to face resistance at 64. If we do it throughout multiple days or multiple candles of 4 hours, we're going to have to do it at 70. So we need to update that resistance that was previous support, and we say that from around, let's say 65. Let's get a number in the middle, and we really need to now go back up into 121,300 and break and close above that level to reclaim the white line so we can go back into the target of 85, that 135. So there are reduced odds of doing that. Now, there's a caveat. This is the 4-hour and it's been really a B. I'm not gonna say the last two letters, but you know what I mean. There's been absolutely only fake outs on the 4-hour. This area in here has been behaving pretty well, right? It's holding the support and then it broke it in a clean way. So the odds are to fail to go to 85, but there is still chances, okay? Keep that in mind. We are in an uptrend and the fake outs are usually to trap bears most of the time, so there is a chance of reclaiming. Now, if we go into 69, that's a move into 121. That's definitely gonna hurt a lot of shorts that most likely are already positioned. This is how it looks, the daily candle with the wick to the upside, and we're starting the day in the red. We really need to do something about it today. If we put further red candles like this, it's almost like giving it to the bears and saying, yeah, we're screwed. This is an ugly candle, that was an ugly candle, and in other areas we can see also some ugly candles in here and in here. Those wicks are things that traders don't want to see. People don't like to take a long right next to a daily candle like that because it looks like you could go to 121, but you're gonna get just another rejection. That's kind of emotionally what people see when they see those candles. And the daily is holding support, right? So we got this breakout that started from an area that yesterday I call of not great quality. What I meant by that is that the RSI went into 76 and it started breaking out from 53. So it didn't really go that low in here to start a breakout. So there is a chance that all of this price action in here on the RSI could still come back down and put a double bottom or lose the green and go to fully reset. That is on the table due to the lower quality relative to, let's say, a breakout from here after having touched the global support. This one managed to get into 78. This one maybe is not gonna get that far beyond these levels. Just probabilities, not certainties. We are currently testing that daily support. Yesterday we closed at 58. Now we're pointing down into 57. So if today we start closing like this, or if we accelerate, we are confirming that this was just a trap, a bull trap. This is how the daily looks, and you can see as well how Lux Algo price action concepts is highlighting that as a liquidity hand just because of the shape. It's kind of inverse with this one that you have in there. You can see that this was a liquidity hand to the downside. It trapped the shorts, it squeezed them back up there. It still went down, but it's still considered a liquidity hand because it killed all the shorts that couldn't take advantage of the upcoming downside. Something I say was I would have liked the price to reach the top of the ascending wedge. Yeah, I would have liked that this top was from 125 coming into 130, both because I can add more with more confidence on that extreme. At the moment my position is still small. In here it will be double or triple, and with the confluence of this week there and then another week there, I will have trade with more confidence that at the very least we're gonna visit the bottom of the wedge. Then if we break down from there, I can hold that short for way longer. Being in here, we could face this support at 116 and then I need to get out or need to pay attention way sooner than the opposite scenario. Where is support and resistance on the daily? Well, that 84, 85 is at 144.7. The support is pretty much at the current price of 118.4. The green support comes in at around 122.5, and then the global support is at 100k.6. And yeah, yesterday we produced a bull cross in there. The histogram is increasing. Now price has the opportunity to follow up with the bullishness of the signal. Otherwise, it's going to turn into a fake out like the one we have in here on 11th of June. And on the weekly, we are back below resistance. So you can see that there are 1-2 weeks to the upside. Of course, we are only on Tuesday, so we have plenty of time to reverse fully this. We continue to have low quality leverage squeeze sell signals in this area, including the one that we put at 122.3. We just paused printing because the price has come down from there, but I'm sure that if price goes back up, it's gonna print again. And if we do that, hopefully we get one of the yellow ones that are better quality. That can only come if the longs get into the top band of the percentile, currently located at 80. At the moment we are at 56. In terms of profit taking on Bitcoin, I'm surprised to not see any spike in here. A spike of the SOPR in this area pinching the top bands, either the white or the yellow, will confirm that there has been too much profit taking at this top. So far this is just hovering the low end, so it's a bit confusing what I'm getting from this indicator, as opposed to Ethereum, which still stands at the high levels in here where people are definitely taking profits massively, but there's so far some bullish absorption that is defending this fifth way around these highs and potentially allowing it to reach the golden pocket of 4.6k, where I'm gonna do my next actions on Ethereum no matter what. What I mean by that is no matter if Ethereum goes to 10K, I am locked in on that level, in all that level going up to take action. Yesterday, there's been some distribution of Bitcoin. There's been 12, 13,000, but there was also 8,000 offsetting that in terms of outflows this time. So basically, the delta is still a little bit bearish, pushing the stochastic up in here, reflecting that large holders are still mostly depositing into exchanges, which is not bullish and is absolutely worth to monitor and to be aware of what happened in the past 2 weeks. When it comes to Bitcoin, there has been deposits on spot ETFs. This time it was 178, not that much to be honest, but it was Ethereum the one that is having everybody observing. I don't think we ever had 1,000 on Ethereum. This is really a huge amount, and you can see the spike in the cumulative thanks to that. We are in grid at 68, and today we're seeing again the sell signal that is gonna be all week in and out depending on the price action. If we stay at these lows, the sell is gonna stay there. If we go up and hit the highs, it's gonna go away. And on the 50 minutes, this is looking a little bit like a toppy pattern. In here, it looks like a head and shoulders. Let me see. I don't trade the 50 minute, but just out of curiosity, where is the target of this? This is pointing to around 114K with that head and shoulder. I'm not gonna trade it. I don't like trading 50 minutes. There's just too much noise, and this pattern could also turn into noise and trap you in a short and then still go and hit the liquidation at 122.8, where we resume liquidity in the short term. In the past 6 months on liquidity heat map, liquidity doesn't look as shiny as 83,000. In the liquidation map on the last 30 days, we can see that the biggest level is 112, just like yesterday, and 115. Now on the third top level, we have this 122,900, and that definitely can hurt the shorts if it starts going into that area. If I go into that area, I'm not gonna add to my short. I need to wait for way higher to add now. And if we go into 115, I will definitely start taking some profits. Those are some levels I'm looking for. But if we are within the CME gap again, I will pay attention to see how we face the order book at that point, because there is some orders to buy the dip at that level. We cannot see them on FAR charts where we see some resistance at 125. We can also see that the purple whales are starting to point up aggressively, and this started happening with this move down into 120. That level is support, and purple whales are kind of defending it in a way. Now let's look at Market Monkey Terminal. We can see here a cloud of defense. The most immediate one is where we currently are, but then we have this 117,500 that is located in this area. That is in the middle of the CME gap, and you can see that it's got 164, 134, 120 in chunks of $500 on my right hand side. Let's go to this other view that I really like, because we can decompose perpetuals versus spot. On the left hand side, we have that support at 117,500, so those are perpetuals. And on spot, we could say that yeah, there is some appetite to buy on spot at 118,100 at the moment, but then that resumes at 112 or at 110. Those are the next levels. If this one fills and price continues to go lower, then 12 and 10 are the next levels of support in spot. The previous week point of control was 116.5. That is more or less where we end the CME gap. So if this pattern breaks to the downside, a low hanging fruit is to hit the previous point of control of the past week, that 116.5. You can see that we are weakening again to the downside with the price action. We really need to take that 118 to get next levels of liquidity at 117.2 and all that was left in here. Now, if this was a bear trap, the most easy target is to liquidate the high leverage that ends at around 120. Then going into 121.6 will be really painful for shorts that are overexposed, but that's where it ends all the liquidity. But these are less leverage compared to the ones that end at 120. Now let's look at the order book. Let's see the bid versus ask. Where is all the liquidity distributed across the book? And we can see that we have some defense between 0.1 and 1.2%. Then in here is flat 2.5. There's a big fight in there. Is flat also 5 to 10. Is flat at 10 to 20. So there's definitely some indecision as we approach the CPI with a good battle there. The typical scenario for volatility is that both sides are balanced. You cannot really see if there's any deficiency to one side. We still have the delta though pretty high, still having the longs at higher risk. Yesterday we have 778, pretty substantial. Now we have slashed that maybe into half with 390. We're clearing some imbalances on fair value gaps, but you can see that after we took the one at 121, we left another one, this time larger than before, and that overlaps probably with those liquidation levels that are located at 121. There is some motivation definitely to go there again, not guaranteed, but there is motivation, which is good if you're planning to build along eventually. Now around here is where we are gonna be talking about CME gap consumption. Around here is the second CME gap, and then if we want to really go lower than that, well, definitely we put on the table those 110, 112 that also had some spot interest to buy it. Let's have a very quick look at general markets. Not much has changed really. The dollar is in the same place, gold as well testing that support, VIX trying to reclaim again, Nasdaq not doing much for the day, it's just pointing down. I guess everything is just waiting for the CPI report and more clarity towards what could that mean for rate cuts in September. The close of yesterday, yes, I say it was slightly in the red, and the altcoins are a little bit having a panic attack as we approach that, not just because of the event, but also because of what Bitcoin did. Bitcoin took a dip of 2.5 and the Ethereum dominance still there, holding strong with a green day against pretty much everything else. Still in the breakout area on the monthly Ethereum. I am not fully sure if tomorrow I'm gonna be able to do a video. I might be able to post some things on Twitter here and there. During the next month, unfortunately, no one can join Patreon. I have all billing paused, so everybody that is already in Patreon are for free. There's some people entering with custom pledge, but doesn't give you anything. So if you do that, be well aware that you won't be able to read articles or enter the community or do anything. So don't do custom pledge unless you really want to buy me a beer, which I appreciate, by the way. We can do a campaign of get the parrot drunk and we'll see what happens. Thanks so much for watching, guys. I'll see you in the next one whenever that is. Bye bye.